Securities and Exchange Commission, the SEC, all statements, other than statements of historical facts, included in this presentation that address activities, events, or developments that a company believes or anticipates will or may occur in the future are forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors which may cause the actual results, performance, or achievements of the company to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. Such factors include general economic and business conditions, the ability to acquire and develop specific projects, the ability to fund operations, healthcare service demands, changes in healthcare practices, government regulation, and other factors which the company has little or no control. The company does not intend and is not obligated to update publicly any forward-looking statements. The contents of this presentation should be considered in conjunction with the warning and cautionary statements contained in the company's recent filings with the SEC. And with that, I turn it over now to Dr. Bill Donovan.
Good afternoon, and welcome to our Q2 Investor Conference. At the request of many investors, we're going to try to speed up this conference and not drag it on too long. Q2, could we change the slide, please? As I said, Q2 has been a busy and productive quarter for the company. I'm not happy with the financial results. However, I'm very pleased with the addition of Dr. DeGaetano joining the company as Senior VP of Market and Sales for Halo. In addition, we're going to talk about the opportunities in the stem cell regenerative medicine field. The slide we have here, the main mission of Spine Injury Solutions is to provide solutions both to hospitals and clinics. I truly feel that the QVH, with documentation and transparency, is the issues that we're looking for. Next slide. If you'll notice this, we're talking about chronic pain. If you look at the bottom of the slide, there's a quote from Dr. Jeffrey Cronk, who's on our board of directors. Jeffrey has shown that injury is the primary event that initiates the disease of chronic pain. It's a true epidemic in the United States and the world, and it is a market over $600 billion a year. The two areas that we're involved on the front end and be more involved is going to be the area of auto accident soft tissue injuries, and that's $260 billion a year, just under cardiovascular and above cancer. The regenerative field, the regenerative medicine field, as of today, is approximately $48 billion. The ability to provide transparency and documentation is critical to the two areas that we're involved in. Next. In the chronic pain, 1 out of 10 American adults experience chronic pain. More than 25 million have pain every day for the previous 3 months. There's more than 126 million, more than half of the U.S. adult population, reported experiencing some sort of pain during the same period. Our focus has to be on how do we evaluate injuries and how do we treat them at an early stage. I believe regenerative medicine is going to have a significant part of treatment of early soft tissue injuries to prevent the development of chronic pain. It's my pleasure to introduce everyone to Dr. Matt DeGaetano. We first met Matt, one of our board members introduced us to him, and over the past several months, we have spent a lot of time with Matt talking about brand development, and we're talking about the QVC, obviously, about brand development, website management, sales automation, and content development. And what we're interested is developing an Apple experience and develop a Tesla showroom where doctors can come and see what we're doing. And I want to have Matt speak about some of these issues now. So Matt, welcome to the company, and let everybody know stuff about you. Thank you.
Awesome. Well, thank you, and I guess this is my first opportunity saying thanks for allowing me to have the opportunity to help the company move forward. And obviously, you've created a fantastic product, and you and I have discussed the concepts of the product and what that should be like, and what can be part of the product line for the customer, not maybe just with the QVH, but other tools such as marketing, and then how does that represent those clients in that particular city. With our opportunity that we've structured in Dallas, I think we have that very unique showroom type of experience, and anybody that understands cell phones today, Apple has probably led the way with what we all have in our hands, which is a computer. Their idea was that it was more than just a phone, and their company became more than that. And I think we have the opportunity to do the same thing with Halo, of one of a kind. Certainly, there's nothing else like it in the industry, and we also need to start thinking about what are the things we can offer to those clients where they can come back and purchase more and more product from us in the alignment of what QVH offers. So with those things in mind, I'm very excited about having that opportunity to help set up the websites as well as the marketing structures and all the communication to the clients, but also being able to interact with them to create that great experience for the customers. So I'd like to say thank you for the opportunity, and I'm excited about getting this up and running as quickly as possible with all of these different structures and marketing channels that I'd like to bring to the table.
That sounds great, Matt. We're now going to have John Bergeron, CFO, do a snapshot and give the financial numbers.
Thank you, Dr. Donovan. On the snapshot at the end of Q2 2016, I would like to bring your attention to two new centers that we are currently in. We've moved into El Paso, and we've moved into Dallas. Dr. DeGaetano just told you about the showroom in Dallas. And El Paso, we're going there on a per-click revenue basis, which basically means they didn't buy it, but every time they use it, they pay us a certain fee. The thing to remember about the snapshot of the balance sheet is that we still have ample working capital. We don't need to get any money loaned to us currently. There hasn't been a big change in the market capitalization or the inside ownership percentage. We still have approximately 700 shareholders. If you can go to the next slide, please. Done. Okay. Basically, you'll see the Q2 over Q2 16 over Q2 15. Notice the revenue was about the same, but the margins were better this year because we had a higher margin. That sales mix was a little different. We did sell our first quad video Halo, and the percentages were a little bit higher than they were last year. we're trying to contain our G&A expenses. You can tell obviously that with the R&D expenses that we had last year were much greater because we were still developing the quad video halo and getting it tested, versus this year where we're just trying to redesign some cards. Nothing else really sticks out. I would like to say that of the $91,987 loss we had for the quarter two, $91,939 of it was non-cash expenses. That's a depreciation, bad debt, and non-stock-based compensation. For the year, I know you don't see that in front of us, but we have got a total revenue of $1.2 million, and we have a $38,000 loss, of which we have 203 non-cash expenditures in that number. You go to the next line, please.
Is that for the 6 months, John?
Yes.
The year. Okay.
Yeah. This is basically the balance sheet. You'll see that the cash still remains strong. The accounts receivable still remain strong. We had a little bit lower in prepaid expenses, which will be explained in the Q if you want to take a look at it. We have in the next year, we have $550,000 in notes that are due back, which is why it's listed as a current asset. We had $1.125 million drawn on the line, which I can tell you in the month of July was paid back down to $1 million. Our shareholders' equity took a little bit of a dip from the last year. Another thing, if you'll see to the left, you'll see the Q2 notes. The current assets exceed the current liabilities, 3.01. We have a 17-cent per share value, and we have currently $1 million in cash and credit available at the end of the second quarter. And with that, I will return you back to Dr. Bill Donovan.
The next slide shows the cases and the cash collected. So we have continued to prove that the business model does work, and we've had a failure rate of no collections of 3.6% of the cases. So out of $15 million, that was $440,000 in cash. This is since its inception. We've settled a little over 2,200 cases, and there's still a little over 2,300 cases still open. Next slide. We've shown this picture. This is the QVHRX. This was actually taken in a teaching hospital in the Midwest, and we were able to show by using different camera angles and inputs to the surgeon and the people in the operating room, the different views. And this was actually being observed by doctors who were not in the operating theater. I'm going to have David, I'm just going to say a few more words, but I'm going to have David talk about the QRX. Our biggest problem until recently was finding hospitals that would approve videotaping of surgical procedures. That has all changed now. We have 4 hospitals that do permit us to do videotaping with approval, obviously, from the patient and the surgeon. So we're going to be talking more about the RX in the future, and we have some cases coming up fairly soon. Next slide. When we talk about the future shareholder value, we're really talking about transparency and documentation. We were recently, several weeks ago, at a stem cell regenerative meeting in Boston, and we were both an exhibitor, but we were also a cadaver course participant. What this all means, the morning sessions were all didactic, provided by the leading research people in the United States on stem cells and so forth. The afternoon, there were 90 doctors there. The afternoon, it was broken down into hands-on sessions, and one of those sessions was a cadaver lab where the doctors came in. They had demonstrations of putting various types of stem cells into the disc of the spine and so forth. Each of those doctors saw the QVH in real life, and the key thing here is documentation. And David will say some stuff about the QVH and documentation, because in regenerative medicine, documentation is critical. The compliance issues are very significant. And at this meeting, there were the scientists and there were the doctors, and they had compliance people who deal with the FDA. And you're going to hear more and more issues, FDA dealing with stem cells and so forth. But as we look at the future value, we're talking about the QVH technology for this part of the business. The previous slide that we showed, the financing part works, and it's very healthy. Where Matt is getting very involved with the QVH, we'll be working with David in the marketing and so forth. But not only do we feel there's significant opportunities in our legacy business, but the QVH is opening up more business opportunities. We're working with our patent attorney for a patent in Europe, because we've been approached to at least get a patent pending in Europe, because the teaching hospitals, the research people that are doing regenerative medicine really want to be able to document what they're doing, how they're doing, what protocols, and so forth. And I'm going to have David say a little about with the QVH technology and the new types of protocols they're putting in. Next slide. So as we look for management goals here and beyond, we're continuing to expand the legacy business, but we have significant opportunities with QVH, QVH-RX, the video teleshare. We've been approached quite a bit about this, and David's going to make just a few comments about telemedicine. But documentation, transparency is what's going to win out in all of these different areas that we're pursuing. David has really developed the remote monitoring procedures with the QVH, which we use routinely now all the time in all the different locations. And he'll explain, he can go on his phone and he can be monitoring Dallas right now. And he texted me a month ago. He was on an airplane at 34,000 feet, and he was monitoring what we were actually doing in one of the centers. So he's developed some very, very nice technology that is going to blossom in all these areas that we're talking about. The video teleshare, we've had a lot of interest in this. So let me turn this over to David to say some words about Halo, QVH, and some of the opportunities that we've been seeing.
Good afternoon, ladies and gentlemen. Just a quick lowdown update on where Quad Video Halo stands and some of the steps forwards we have made to follow up on the press release in regards to the Boston BioLife conference that we attended and that Dr. Donovan has touched on. what we have found is that we've found a couple more markets that that the Halo can move itself into due to its robust platform that we've developed. We've anticipated it for the the market that we're currently pushing it in, but now I've found that it is an excellent match for regen medicine, for example. And recently, the new studies came out when you talk about the telemedicine platform, which is what the quad video set up for. What that report came back at us saying is basically half of the hospitals now use some sort of telemedicine. And with that being said, that also is quickly gaining grounds on all parties involved, i.e. being physicians, providers, patients, and even legislation at that point. So these things that have been on the forefront, we've now been able to, we're now finding the markets to, quantify what we've, come up with. And to move it further, when you look at the quad video Halo and what we've done with the recordings, when we took the assessment from when we were filming in the surgical centers, it was one of those that we wanted to bring in a lighter footprint. So we will be rolling out we've finished the development on it, and we are rolling out a prototype surgery, or it's a full-blown surgery, and we're taking our prototype now to the OR. It will be doing a 360-degree camera in the OR, and that will enable VR live streaming as well, that we are going to be putting to test here within the end of the month if the surgery date lines up appropriately. So that opens up not having a bunch of cameras in the OR, cluttering it up, letting the doctor stay focused on what they're doing, and also the support staff as well, without having to add more problems. So the lighter the footprint, the better, but also injecting better technology that students can leverage, collaborators can as well. The next thing that we found, I guess going back to the BioLife clinic from the cadaver standpoint, also seeing this in use, was that we instantly recognized that quad video Halo documents, but why can't it also be a support documentation platform from a scientist to the doctors, and use that as a collaboration platform? And I guess to better explain that is that we do a beautiful job of capturing what's going on. Why don't we bring some more things to the table? The quad video Halo can handle it. So BioLife opened that up for us, and we see a very, very good market here in that regard. And the telemedicine plugs right into all that, so it can blend across all environments. So when you talk about what we're doing in the OR with streaming video, you bring telemedicine into that, then you take that all the way down to research and development in the medical field. I think we're opening the doors to a very bright future. So I just wanted to update everybody on that, and as new developments come out, we'll keep you notified, and I do appreciate it, and I will pass you on to Bill Donovan.
We'd like to open up any questions dealing with the company, but our whole idea today was to give you an update on the status of the company, and I'm very excited. I wasn't happy with the financials, but there's a lot in the pipeline that makes me very happy and confident.
All right. Got several questions here. Mr. Berman has 4 questions. First one, why has there not been any affiliate expansion?
We're working on some affiliate expansions right now, and in 3-4 different states. I thought they would have been part of Q2, but they haven't been completed yet. But we are working on expanding the affiliates.
Well, that answers his second question, which was, will there be any new affiliates starting in the next 3 to 4 months? And his third question is, will our balance sheet support 2 growing businesses, Halo and Legacy?
We're hoping that the balance sheet will support it. And I'm working with John, and we're working with people to. This is one of the reasons why we're looking at the per-click basis, and we have it in a trial situation now, and it would be able to generate revenue without expending a lot of revenue on our part. Number two, we anticipate and hope that some issues that we're working with right now can strongly improve the balance sheet. And when things are completed, we will advise our shareholders.
And the next question by Mike Andrews: will we sell or lease or install another QVH to a third party in 2016?
Yes.
Yeah, and if not, Mike is going to get fired. Matt, I'm sorry. Okay, let's see. And here it is from Ratna Carl. Well, wait a minute. This is a question he's asking me how to log in. Okay, here are two questions, though, he also had at this point. Well, he's asking what has been holding back the company for more affiliates. That has obviously already just been answered. Dr. D has been talking about several NDAs since last year, but we don't see much in adding these affiliates, except just announced Dallas and El Paso. Anyway, okay, you've answered actually all his questions.
Now, let me answer that. We have 5 or 6 NDAs on our table signed right now, but that leads us to the next step. We have some very, very good and interesting NDAs that are signed, and we're just developing the process to get these completed into working programs. We're busy with people, but I thought things would be here. Things always seem to take longer, but we're working hard. So that's why I said way back, it's been a busy and interesting Q2. Period. I wasn't happy with the numbers, but we're working there hard.
He also is asking, do we have any leasing options available to anyone interested in taking it on other than per click or buying it outright?
We're working on leasing options right now, and with Matt, that's going to be one of the issues he's working. John Bergeron is working on 2 separate leasing issues, and we're coming up with a coordinated plan with a list of what doctors would need in order to get into business with the QVH. So we're coming up with a menu of options, and a straight up lease is non-related to the company is part of that, sure.
And Lee Gao has 2 more questions. How is the Halo sales going after the first sale?
Obviously, we haven't completed any full sales since the first sale. However, the first people who bought a unit, option for several more in the greater Dallas, Fort Worth Metroplex. We're talking with other people. We just have not consummated a sale, but we're actively talking with people.
And a question from Harold Gabori. Why aren't you opening any more clinics for the legacy business using a medical salesperson? I'm not sure quite how that ties in, but why aren't you opening many more clinics for the legacy business? I think what he's saying here, if we considered using the medical reps for selling our products,
No,
which is a good question anyway.
No, we've done that in the past. We're working on a unit right now that could be a very good unit. And everything is in place, and we're adding the doctors who need the QVH service. It'll be done soon, but it takes much more than someone who's medical sales. One has to understand the rules of the state, the status of the doctor who's interested in it, what kinds of equipment does he have? Does he have a halo in his office, or is the halo at an ASC? So it crosses many medical device areas. So just a straight medical salesman, we've tried that in the past. We're coming up with a better approach, and you know, it's really interesting. Quite a while ago, when we were marketing to doctors, we came up with a slide that what I thought was very good. It's called Anatomy of a Case. And what it showed was that to doctors, if you have 100 patients that have been injured, by the time that group of patients get to doctors like us, 80% or 90% or better. So we're seeing about a small percentage of the people who are initially injured. And we said to the doctors they would go through the differential diagnosis method, that is, be evaluated by a specialist. If there's something wrong, you do the next step to identify the pain generator site. If the patient doesn't get better, some additional treatment would be necessary. So when you get down to the treatment part, it's a small percentage of the original people, and these are people that are still having treatment. Well, doctors understood that very quickly because that's the basis of differential diagnosis. We showed the very same thing to investors, and they didn't understand it. Well, it was our fault because we didn't understand marketing the way you would to an investors from the doctors. Well, this is why we brought now guys like Matt on board who can help us talk to both sides, but in a different way. So and it translates over to opening new affiliate groups. We know that the legacy program works.
We have a question here, another follow-up from Harold. This is for Dr. Matt. What changes do you see that can be made to the company that can more aggressively drive sales?
I think first, the presence of a website that is designed to receive traffic and communicate to particular customers. Each particular customer or doctor coming to the site is going to be searching for information. That's fine. But we also need to then drip information to communicate to them because each customer also has their own buying cycle, and we want to be prepared for each person to buy when they're ready. We'll create video marketing. We're going to create emails that are very specific and targeted for the product, but also striking upon some of the challenges that medical providers are facing today. We know them pretty well, certainly with surgeons and doctors doing procedures. So the concept would be to, strategically put the copy together. Sites are going to be very, very important to be able to send them to where they can be educated. They can go to seminar links where we've presented before, really loaded up so that they get to see the full picture, and then also offering some other components that I think could be valuable in the marketing space, where we can offer tools that will help them, bring this product to a market where they can compete as a provider in those areas.
All right, let's see. Bill, this is for you about the dribbling of shares. Is that lawsuit shares finally sold out?
Yeah. Well, I don't know if they've been sold, but there's no 144 coming through.
Okay, I guess that means it's sold. Good. And Steve Miller is asking, can you be more specific as to what is holding up the signing of more affiliates? Exactly what are the issue?
Having the right people with the right doctors and the right environment, and having the capital to pursue what requires to set everything up. That's why we're trying two different methods. Conventional method, where they lease the equipment, a per-click method. So it comes down to a combination of monies available to do it, have our people on site managing it. I'll give you an example. We have a situation where there are 5 clinics that want to be involved. We have an interventional pain doctor who's already been chosen. He has a facility, and we're now in the process of getting that halo into that market. I think that'll be soon. Not far from that, an entirely different market. We know that the market needs it. The first 2 doctors we picked out to be involved with, we did extensive due diligence on it, and we backed off from those 2. We have other people coming in to help us. That'll be a market. There's a market up east. We will be in that market fairly soon, and what's the only thing holding up, the doctor wants it. We're going over the location of where the C-arm is physically right now. So, Steve, there's many issues that need to come together to make it really work. What we do know, if we can get into a market, get a QVH set up, and have 1 or 2 or 3 docs that are requiring that kind of technology, it can be successful. We're very careful about who we deal with. Remember, 5 years ago, we had 7 affiliates in Florida. And the people that were organizing it, they have all gone through bankruptcy. Thank God we had letters of assignment from the patients. So we avoided all of those issues. So it's many combinations.
Yeah, Bill got a lot of questions here today, so.
It depends on state rules. You know, is it MedPay? Is it whatever the structure? So there's a lot of issues to cover in order to get a successful unit up.
Here's a follow-up on that. Maybe Matt can address it since he has a Colossus background and it ties in so well into what we're doing. Does he think will he be helping the company also, not just from the Quad Video Halo marketing side, but also for expansions of affiliate? And that's also from Harold.
In terms of expansions of affiliates, you know, in different markets, is that where we're referencing here when you state that?
Right, the legacy affiliates, the financing cases.
Yes. I think we have quite a bit of opportunities. We were just reviewing an opportunity in Florida, and there's other markets that we're going to be able to look at. California is one, Washington State's another. So we have some conversations as we speak in regarding to other markets.
Okay. Let's see. Another question from Steve Miller. The conferences and exhibits you're attending anywhere are the anywhere are there pics or videos as part of the PR effort, not only for spin but also for shareholders? By the way, Steve is the moderator of the Yahoo private chat board, so I'm sure that's what he's asking this question for. Not only for spin but also for shareholders. We're not seeing anything out there.
I'm sorry, I missed the first part of that question.
Okay.
What was that?
Steve Miller was asking, when we go to these conference and exhibits, are we taking any pics or videos or stuff like that that can be shared with the shareholders so you can put it on the private chat board files?
That's actually a great question. We have pics, and I'll be talking to David. I know that when we were at the stem cell regenerative medicine, we were doing some videos in the cadaver lab, and we do have some pics. We're going to make an effort, and I think Matt's going to help us coordinate a lot of that. So I think Matt, David, and myself, we're going to come out with better ideas to really keep the investors involved. And that's been a deficiency of ours, there's no question.
Okay, and again from Carl, it says, I've been harping on this for some years now. I don't want to block up time, but I'd like to know whether his suggestion from a few years ago to work with liability insurers to give a discount rebate to doctors who use our system, has that been followed through for the Quad Video Halo?
We have talked to some insurance companies about that on two issues. Number one, reducing medical fraud, that's part of it, and dealing with malpractice issues, the cost of malpractice insurance. Those are big industries. We have not found a champion yet, but we have been talking to insurance people. I believe over the next 3 to 5 years, you read in the newspapers every day about the OIG, Inspector General, what they're doing on Medicare fraud. It used to be they were getting cases $100,000. They're settling cases now in the billions of dollars. So Medicare fraud and medical fraud in general is the OIG's really after that. And I think the QVH could really reduce medical fraud on certain procedures. Very simple. You bill for 30 ESIs, fine, we'll pay you. Send us the video. Make sure you really did it. I think we're going to see this be involved with medical fraud and medical malpractice.
Another question from Steve Miller. If a shareholder wants to generate interest in SPIN to other potential shareholders, what resources does SPIN have that are available for such purposes that shareholders can use? Well, I guess he kind of asked the same way. I guess what he's saying now is, before it was for conferences and such, now he's just basically saying any type of quality videos or.
Well,
we do have videos like we have the pictures. These are screen captures that you have in here too.
But remember what Matt was talking about. It's brand development. It's website management. These are things in content development. We have to get better websites. We know it. And when we first started talking to Matt, most of my time was dealing with that. I need the right people getting the right content up so that our shareholders will understand what we're doing and where we're going. And that is a high priority between Matt and myself.
Okay. And here's a new investor named Walter Ager. Why does the legacy business constantly disappoint? Last quarter was an exception, but this quarter it's already disappointment again. You claim the business works, but the company loses money in 4 out of 5 quarters. It's not exactly proof of it.
Well, the legacy doesn't lose money. The losses have been on the Halo side. And from beginning, we've collected $15 million, and we started by investing $2.5 million. So the legacy business does work. If that was a standalone business, it would be profitable.
Considering they're only averaged about 4 centers really in operation any given time, that is impressive.
Correct. That's correct.
It shows an upside potential.
The legacy business works, and it's profitable. Our losses have been on the other side, but you know, when you're developing something new, we have to go through that process. But let me tell you, QVH, there's going to be a lot happening with QVH. It's going to be all worth that time and money.
And here's Harold Gubbery again, and we asked the question twice in a row. When will someone start promoting the company as to raise the stock price?
Well, our job is to get this company profitable and provide really, really great products to the medical doctors and the scientists. I don't have any control over the price of the stock or whatever, but I'll tell you, QVH is a very, very special product in the medical field. And let me tell you, at this stem cell regenerative medicine, these scientists and these doctors know that.
Okay, here's another question for Matt. It says, how do you think it's going to be different from you working for a company instead of working for yourself? And what do you see as the real driver that made you want to come over?
I've been in practice as a chiropractor for 20 years, and I've been involved in personal injury since that time. I've dealt with thousands of patients, and moving from one market, which is considered what is called a no-fault market, to a non-no-fault market, my study of the arena has been deep, and I really invested a ton of time in understanding where the challenges were for providers. All of those skills are 100% applicable to every client that could work with the Halo product. So I understand the challenges that many of them are going to face, and moving through the entire process from opening a clinic to running a clinic and having a clinic that is functioning at this present time. So I believe that skill of that experience plus running a couple of companies besides this, I think my skills would be better in helping set up the structures of marketing and the direction that I've been brought on to assist.
If I could add on that, why don't you tell them a little bit about your Personal Injury Institute and how you managed to set that up and make that so successful. So, which of course we all know you will be able to keep that, but it's an internet website that's already set up as far as time is concerned.
Well, you know, like I said, you know, what I began to realize is that there was a gap. There was a gap in the education for medical school and chiropractic colleges in dealing in this industry. There's no training that's available. So when we wound up creating a system, I was really doing it for my own practices, and then I began to see that there were other doctors that faced the same problem. So my belief is that the doctors that will buy Halo are going to face the same challenges, and we're going to have solutions for virtually every challenge that they will have, and then develop additional products for Halo in that area. So I guess to tie up that part of that question is that why would I do this? I'm very excited to do a lot of different things, and this is unique, and I think this product is unique. Just as the idea of having that Apple experience as we discussed earlier, I'd like to be part of creating something significant like that. So there's a lot of reasons why that I have that interest, and certainly understanding the vision of what Dr. Donovan had put forth and what he's created, and helping facilitate that. There were many reasons why I chose to go in this direction.
I might, just to let them know, how long ago did you actually sign the document to take over your new job, and how long we've been in negotiation, or has the company been in negotiation with you on it?
How long did I sign?
How long, in other words, the reason the press release came out today, right around the time the market closed, is because this got signed when?
Today.
An hour before?
An hour before, exactly.
An hour before. That, I didn't want them to think that we decided to put your great resume out there to cover up the quarterly numbers, because the quarterly numbers in the future, now that you're aboard, should not resemble anything we've seen in the past. Is that a fair statement?
Sure.
I'll put you on the spot. All right, last question from Frank Blatterman. Streaming video, is this not creating a HIPAA problem? How secure is the stream?
Hold on. Here's David Wanson. How secure?
Yeah, on the security of the streaming, what we've done is that when we started looking at cloud solutions and storage side of it, we put major consideration into HIPAA and how the streaming is secured. So when we do utilize the streaming service, we meet the HIPAA compliance by using vendors that are already certified with HIPAA with their streaming, their backbone architecture, and also their storage mechanics as well. So we always peer into that, putting that as priority one for HIPAA compliance. So we cover that.
Okay, Dr. Donovan, would you like to give a parting comment?
Well, I want to thank everybody for taking time, staying with us. You know, we have our ups and downs, but we're keeping our eye on the target here. It's documentation, 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 and that means transparency. Nobody can come back and say, well, we don't want documentation, we don't want transparency. Both of these components are in both sides of this business, legacy QVH. And we have to remember, medicine's changed. It's under attack. Hospitals and doctors, their revenues are going down. And they're looking for something that can be positive to their business and bottom line. I believe we have some products now that can benefit that, and we're developing additional products. This is why Matt is here. This is why David's here. This is why John's here. This is why Tim is here. This is what drives us every day. And we have to get better at visually based communications with the shareholders. And we're going to. And I'm not going to make excuses. I'm the one that has screwed up. But I'm surrounding myself by people that can help resolve these issues. There's some huge markets there. And the legacy business is a very large market. Over the next 3 to 5 years, regenerative medicine is going to be huge, huge. And it's going to require documentation. So stay with us, come for the ride, and hopefully we will answer your questions and make you guys happy, guys and gals happy. But thanks for being on today.